Hello and welcome to the monthly recap. This is for the month ending today, Friday, November 28th, 2025. I hope you all had a wonderful month. I hope you had a wonderful Thanksgiving. It is by far and away my favorite holiday. I love everything about it. I love the food. I love the family. I love the football. It's just absolutely my favorite. And it also includes my favorite all time food, which is pumpkin pie. I get it, twice a year. But I love pumpkin pie. It's just my absolute favorite food. The entire family shares a pie. Aaron gets his own pie. That's the household rule. My dogs kind of look how I feel, a little bit sluggish and hungover after Thanksgiving. So hope you all had a wonderful one. So let's talk about November. Okay. So it was a really busy month. We had the government shutdown that came to an end. We've got a backlog of data that's starting to stream into the markets, but it's kind of a trickle right now. As you're going to see in a little bit here, we're going to get a lot of data this month. And then the Fed rate outlook for December. What's the Fed going to do in their upcoming meeting? Going to talk about that pretty extensively. That's really fascinating if you're a money nerd like I am. Mortgage rates as a whole, they ended the month around 6.125%, so a little bit of an improvement from last month. Hope you all had a wonderful month. Like I said, happy Veterans Day, happy Thanksgiving. Let's get right into it. So, government shutdown. It came to an end on November 12th. It was the longest on record. Okay, so the longest on record government shutdown came to an end. It lasted for 43 days from October 1st through November 12th. It surpassed the previous record of 34 days that was in Trump's first presidency from December 22, 18 through January 24th, 19. With the government shutdown, data was mostly shut down as well. Okay, give me looking at that on the next slide here. But the government is now officially funded until January 30th. Only January 30th. We might be dealing with this all again in literally just a couple months here. We'll see. I don't think anybody enjoyed it the first time around. I don't think anybody wants it the second time around. So maybe cooler heads do prevail, but we shall see. Going to be really interesting to see how those negotiations go. I don't want to spend too much time on that because it's such an unknown. I mean, as you saw last time, when everybody kind of gets on the same page and decides to reopen the government, it happened almost immediately. It was very, 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 very quick. Well, great. So what does it look like come January 30th? Hopefully they get ahead of it. We shall see. With regards to the government reporting, like I said, it was pretty much shut down for the better parts of 2 months, and now they're behind schedule. Okay, so they did come out and they said, look, the Bureau of Labor Statistics jobs report. Okay, we're going to receive the partial report for October. It's not going to be the full report, but a partial report for October released on December 16th. Okay, the November jobs report, because they are, like I said, multiple months behind schedule now, is going to be released on December 16th as well. So full November report, partial October jobs report. That jobs numbers, as you're going to see in a little bit here, are extremely important. So we'll see what happens. The timing on this is really interesting. You're going to see that on the next slide as well here. But yeah, those reports are being released on December 16th. Consumer Price Index. Okay, so inflation, and the primary two inflation reports are Consumer Price Index, CPI, and Personal Consumption Expenditures, PCE. Okay, the October CPI, October Consumer Price Index, has been canceled. Just flat out canceled. I don't think we've seen anything like that since COVID-19 when some of those reports were being canceled. So yeah, kind of crazy here, but that report is just flat out canceled. They said not delayed, just not going to happen. Sorry. The November, we're going to get that full report on December 18th. Again, that timing is really, really interesting, as you're going to see here in a second. Quarter three GDP and September, October PCE, personal consumption expenditures, again, the Fed's favorite measure of inflation. Those are all TBD, okay? Those are all to be determined. They have not released when those are going to come out. They just told us about the BLS reports and some updated inflation on Consumer Price Index. So let's talk about inflation real fast here. Like I said, those reports have really been kind of, delayed or canceled as a whole. The one report we did get lately was the Producer Price Index, PPI, Producer Price Index. That is wholesale level inflation. Inflation as businesses feel it. And actually, we got a little bit of good news there, okay? The headline came in up 0.3%. The yearly stayed at 2.7%. So I colored that yellow because it is pretty much neutral. The core, which is when you remove the volatile food and energy from that equation, came up 1.1%. The yearly actually fell from 2.8 down to 2.6%. So that's a very positive move. When we look at the difference between core and headline, Core, again, is with the volatile food and energy removed from the equation. Headline is all in. And what we found was that September oil prices were really, really high, which is why there was such a discrepancy between the headline figure and the core rate. It's also why market experts tend to prefer the core rate because they don't want to be at the volatility of what's going on with gas prices one month or another. Okay, consumer price index. Again, we haven't gotten data on this in months now. So core is still at 3%. The Fed wants core CPI to get down to 2%. So we still have a lot of way to go. PC, again, been delayed for quite some time. That core sits at 2.9% currently. So where's my data? Where's my data? Where's my data? Well, it's going to be coming out next month, at least some of it. But yeah, there's a backlog of data that needs to flow into the markets. Now, I mentioned the timing was really, really interesting here. And here's why. So if you look at the dates that they're going to start to release the data, December 16th and December 18th, okay? Those are really important dates because the Fed is meeting on December 10th. They are not going to have that data when they meet next time. And that meeting is a big one. It's an important one. It is a meeting associated with the summary of economic projection. So it's not just the Fed saying what they decided to do with rates. It's where do they think things are going to go from here. And they're not going to have that critically important updated inflation data and updated jobs data at that December 10th meeting. That's a little bit of a problem, and it puts the Fed in a little bit of a precarious situation. So let's look at the Fed and the roller coaster ride that they've been on. So in October, the Fed cut rates, okay? And Jerome Powell gifted us a present, okay, as you can see in this picture. And the opinion was the December 10th rate cut was all but a certainty, okay? Over 85% chance that the Fed was going to cut rates at that meeting in December. Markets were very happy. Markets have been predicting an additional rate cut in December, and they were very, very happy. So Jerome Powell gifted us this present by saying, hey, we're going to cut rates, and the markets were widely expecting a December 10th rate cut. Again, odds were over 85% at that time, all but a certainty. And then Jerome Powell came out and he said this. With regards to a December 10th rate cut, it's not a foregone conclusion, far from it. And the second he threw in that qualifier of far from it, the markets are freaking out, okay? The odds of a Fed rate cut in December plummeted to less than 60%. And that was just the beginning, okay? So Jerome Powell gave us a gift, and then he dropped it, getting shattered in a bunch of pieces. Then the Fed releases their Fed minutes, which is a peek behind the curtains of all the conversations that are being had at these Fed meetings. And the members are really, really split. The majority said that they wanted to pause rate cuts because they were concerned over inflation, okay? But a fair amount, what we call dubs, they favored a rate cut on December 10th. And they had concerns over the labor market. So you might remember this graphic below, hawks and dubs playing tug of war, okay? Hawks tend to be less financially accommodative, okay? They don't want to make a lot of Fed rate cuts. Their primary concern is on inflation. They focus on inflation, price control, all things being else. Okay, all things being equal. Dubs are more financially accommodative. They're more in favor of cutting rates. Okay, they're less concerned about inflation. They're more in favor of cutting rates. So we got the Dubs and the Hawks playing tug of war once again. Okay, the Hawks are focusing on inflation. The Dubs are focusing on the labor market. Okay, more financially accommodated, focusing on the labor market. Well, the Dubs said, hey, look, we want to cut rates in December because we don't feel great about the labor market. Talk about that in a little bit here. Okay. Hawks said, to heck with that. We care more about inflation. Inflation is still elevated. We need to be focusing on inflation. We're more in favor of pausing rates. So very split, very divided Fed. Hawks and Dubs kind of duking it out. Well, then we got the September BLS report, okay, the September jobs report. It showed 119,000 jobs being created. Expectations were only for 50,000 jobs being created. So it beat expectations. Those Dubs that said, hey, we have concerns over the labor market may have been given some cover. Okay, they're flying around and all of a sudden there's a nice tree with a lot of cover. Well, they kind of could hunker down on that and say, oh, wait, look at the jobs report. It actually was pretty strong. Okay, we'll get in line with the Hawks. And since the Hawks already had a majority and wanted to pause cutting the Fed rate, well, great. Now the Dubs could kind of fall in line and take that cover. But then you look at the underlying data. And the underlying data shows that the prior two jobs reports were both revised lower by 33,000. Eek, that's not great. And when you look at the 5-month run rate, the 5-month average, it's only 38,600 jobs in a month. That is not great. That is very anemic job growth. That does not point to a labor market or a jobs market that's very strong. Okay. And then the unemployment rate ticked up. It increased from 4.3% to 4.44%. And when it comes to the unemployment rate, they always round. So if it crosses over that threshold, 4.51, all of a sudden it's going to get rounded up and it's going to look like it's 4.6, 4.5. So yeah, it's very very close to seeing some really elevated unemployment numbers. 4.5, 4.6 is not out of the question in the future. So do the Doves have that covered? Yes or no? Well, with that September jobs report, the odds of a rate cut plummeted to less than 30%. Okay, so all of a sudden they went from over 85% of a rate cut in December to less than 33%. It's a huge change. Then Friday, the 21st, influential Fed president came out and said he believed that the Fed could cut short term due to the labor market posing a bigger threat than inflation. That is a very dovish comment, right? All of a sudden, the odds jumped from 33% to 77%. It's all over the map. This is such a roller coaster ride, and it points to a very, very divided Fed, and really nobody knowing for sure what's going to happen with that December 10th rate cut. Wednesday, ADP did report that in the 4 weeks ending on November 8th, there's been an average actually of 13,500 job losses per week. Again, pointing to a very calm, cool, anemic labor market. Odds jumped then further from 77% chance of a rate cut to 85% chance of a rate cut. That's all over the map here, from 33% to 85%. Once again, shocking. It's just all over the freaking map. And it does point to a very divided Fed. So will they or won't they cut rates in December? The odds right now say yes, but as we've seen, this thing can change very, very quickly. It's going to be very interesting to see what happens at that meeting. Again, we got the Doves and the Hawks duking it out. Will the Hawks drop the president once again, or will the Doves win out and Jerome Powell will gift us another president of another 0.25% rate cut? We shall see. It's going to be very, very interesting. Like I said, especially if you're a money nerd like I am. This is my jam. This is lovely. All right. So let's look ahead, okay? The backlog of data, as I mentioned, is going to be flooded into the market. Middle of December, December 16th, December 18th, we're going to get a lot of that data, and it's going to continue to flow. The markets are going to start to digest that extensively. The markets have kind of been stuck in neutral for a little bit here as they kind of wait for this flood of data to come. Well, it's coming. It's on its way. We're about to see it, okay? How does holiday spending come in? That's going to be very telling too. Holiday spending, we kind of get that not quite in real time, but very quickly. So how are Americans consumers spending money in times when credit card rates are still elevated, personal rates are still elevated, delinquency on auto loans is starting to pick up? Like, how are Americans spending their holiday money? Do they keep spending? We saw that during COVID-19 when we thought everybody was going to stop spending, and they just kept spending. So it's going to be very interesting to see. Fed meeting, and like I said, it's a big one. It's a big one at that. It's going to be very interesting to see. And again, it's not just a meeting, but it's a meeting associated with a summary of economic projections. They have to show their work. Where does each member think Fed funds rates going? What do they think about unemployment? What do they think about GDP? All that is going to come out. It's going to be very, very interesting to see all that data. And then when do the rate cuts begin to show up in the labor market? We've gotten 2 rate cuts. That's 0.5%, right? When do we start to see that really bleed into the market and actually start to help the labor market as well as the economy? Those that favor rate cuts are doing so because they want to improve the labor market. If businesses are spending less money on debt, they have more money to spend on employees. Very, very interesting stuff here. And then that data is going to be setting the stage for 2026. So what do we see? What are we looking at? Going to be very, very interesting. Hope you all have a wonderful weekend ahead of you. Hope you all have a wonderful December. I will see you at the end of it. And be well, stay safe. Thank you. Appreciate you so much. Bye.